The markets formed a day of indecision. The Dow did a doji right here where it supported before. Stochastics are still heading down. However, a doji will still tell us the simple rule of a doji. They'll move the market in the direction of how they open the market tomorrow. A positive open would indicate this is acting as support. A lower open would tell us that they have a doji sandwich, that there could be another big down day taking us all the way down close to the 200-day moving average if that day is the same magnitude as this day right here. The NASDAQ opened lower right on the 50-day moving average area and traded positive. Another important indicator to tell us if they open positive, then more than likely they're going to at least bounce up to the T-line. If they open it lower, telling us the 50 is not acting as support, that there's still more downside. This makes entering into individual stock positions that have good patterns. We see on OVAS there was a double bottom. It pulled back yesterday, and then today it did a doji right here at the T-line area. Makes it very simple. If they open this positive, this pattern is in effect. You still want to be a buyer. If it opens lower and starts trading below the T-line, they're probably coming back to the 50-day moving average. Again, the simple rule of a doji with expectations of what should happen after a doji allows the candlestick investor to know whether to be buying or closing out positions. Identifying patterns such as kind of the scoop pattern occurring in crude oil, making crude oil prices higher after the doji sandwich up through the T-line yesterday. A doji sandwich is a bullish day, a doji, and this makes it, again, very simple. Using the doji rule, it's going to move in the direction of how they open after the doji. They started trading positive. We know that the doji sandwich was in progress, which would mean today that magnitude of that candle was the same as that magnitude of that candle, clearly indicating that the T-line was not going to act as resistance anymore. Additionally, we know that there's more follow-through usually after a doji sandwich, which told us the 50-day moving average wasn't going to act as resistance. Now, if it breaks through this level, still have more upside. This makes for very high probability trades, such as our recommendation on LPI. If this opens positive tomorrow, which basically if we see the crude oil prices opening higher, and this opens higher, we have a doji sandwich, fry pan bottom breakout, very high probability that breaking out through this downward trend channel and the fry pan bottom would make for a very strong price move to the upside. Not only do the candlestick signals and patterns show you which direction things should be moving, but which ones will usually have very high powerful trade moves. That'll be it. We'll see you in the chat rooms.